So for our project, we did the income statements of General Motors and Volkswagen, and then we also did Dell and Fujitsu. A little background information on General Motors. They design, manufacture, and market a variety of name brand cars such as Chevy, Buick, GMC, and Cadillac. They're an American worldwide corporation in 120 different countries, and their headquarters is in Detroit, Michigan. Then some background information on Volkswagen. Volkswagen is a worldwide automotive manufacturer. Their headquarters is in Wolfsburg, Lower Saxon, Germany. So they're top-selling and original brand of the Volkswagen Group. They only sell their brand of cars, so it's unlike GM. GM sells a variety of different kinds, like the Chevy and Buick, like I said previously. Volkswagen is also the largest German automaker and the second largest automaker in the world. And then this is General Motors income statement. Okay, so this is General Motors income statement. General Motors is under GAAP. So this is like their period is their fiscal period is in December, and it shows like their total revenues, their cost of revenues, their gross profit. It lists like their operating expenses, their operating income or losses, and then their non-recurring events, and then it ends with the net income. This is Volkswagen's income statement. Volkswagen is under IFRS, and IFRS is the International Financial Report Statement. In this one, it's a little more condensed. They show their sales, their cost of goods sold, their gross profit on sales, their selling expenses, and then it lists like other operating expenses, like their financial result, and then their result from ordinary activities, tax on income, and then this one also ends with the net income for the year.
Okay, some differences between the net income statements for GM and Volkswagen. General Motors has their money in US dollars since it's an American company that follows GAAP, and Volkswagen is shown in euros since it's an international company that follows IFRS. GM income statement is more detailed compared to Volkswagen's less detailed income statement. General Motors breaks down the expenses and revenues into various categories, unlike Volkswagen, who only lists their expenses and the key revenues. General Motors uses the LIFO method for inventory, which shows their last in, first out inventory. If the prices are increasing in time, it shows less net income, which lowers their taxes because they're not being taxed on a higher income. Unlike Volkswagen, who doesn't use LIFO because it's not acceptable under IFRS, Volkswagen shows a more honest representation of their net income because it doesn't allow LIFO.
Some background information on Dell. Dell is an industry that produces computer hardware, computer software, IT services, IT counseling. It's an American worldwide company. Its headquarters are in Rock Island, Texas, and it's one of the largest technical corporations in the world. And then Fujitsu, it's a worldwide Japanese company, and they're an industry that deals with computer hardware, computer software, IT services, IT counseling, and telecommunications, so it's basically the same thing as Dell. Their headquarters are in Tokyo, Japan, and then they are the third largest IT service provider measured by revenues. And then this is Dell's income statement. Dell is, since it's a U.S. Company, it runs under GAAP. So to break it down, it shows their total revenues, their cost of revenues, their gross profits, their total operating expenses, operating income. But this one doesn't break down their total operating expenses. It shows other income, the minority interest, the interest expense, income tax, and then it follows all the way down and ends with net income. And then Fujitsu, they go under IFRS because they are an international company, so they run under IFRS. To break down their income statement, it starts off with net sales, cost of goods sold, gross profit, and then their operating income. It lists other types of income like interest income, dividend income, and then it has other expenses, and then it lists different expenses like interest charges, loss of disposal of plant and equipment, and intangible assets. And then it has the other category of income before income taxes and minority interest, and then it lists income taxes, and there's two types of income tax in Fujitsu's income statement. There's current and deferred, and then it ends with income before minority interest.
Okay, just like before with General Motors and Volkswagen, we're going to compare the income statement between Dell and Fujitsu. Just like before, Dell is in US dollars because it is an American company under GAAP. Fujitsu is in yen because it's a Japanese company, so its income statement is given in yen. Dell gives the net income as a percent, unlike Fujitsu, who gives it as an actual value. The fiscal year in Dell ends in January, and the fiscal year in Fujitsu ends in March. Dell uses a just-in-time method for their inventory, which means that they don't actually have like inventory readily available on hand, but they make it just in time to be sent out to the customer or like consumers. And Fujitsu doesn't use a LIFO method because it's under IFRS, just like we previously said before with Volkswagen, since they don't follow LIFO.
So now I'm going to explain the differences between GAAP and IFRS. For GAAP, it's used by American companies, and all of the American companies or companies in general that like do businesses in America. It's based on more rules. It allows LIFO. Once like the inventory is written down, you cannot like fix it, and it uses a two-step method for impairment write-downs, and it's more detailed. For IFRS, we can see that it's more internationally used. So meaning that companies that do not do businesses with America usually opt to use this method. It's more based on principles. It doesn't allow LIFO for inventory costs. Its inventory is written down, the companies can fix it eventually. And it uses a simple method step for impairment write-downs. It's less detailed than the other one. The most important items on the income statement for these companies are the net income, because it reflects the profit that they make for the determined accounting period. Expenses, because the costs, it expresses the costs incurred by a company in an effort to generate new revenues and profits. The cost of goods sold, because it represents the actual values of the cost that the companies use to make the products, and revenues, because it reflects how much the companies actually made.
And now we come to the conclusion that the Volkswagen is easier to understand because it is simple, it is more simple to read, and also the summary of each expense and revenue is more condensed form in difference from of General Motors. And Volkswagen says this income statement, the net income statement, more clearly. The difference with General Motors, which it doesn't. Okay. And which one is more transparent? We came to the conclusion that Volkswagen is also more transparent since it's a part of IFRS, and it is more honest and transparent because it gives a clear statement of the net income, because you cannot use LIFO to manipulate the inventory and net income. These are the sources that we use to complete this project. Thank you very much.